you take a look at shares of GameStop this morning, that stock actually jumped 19% in yesterday's session. It's now up about 33% for the week. You can see it's off by 2% this morning. It's been up 4 out of the last 5 trading sessions after Keith Gill, of course, that's the trader also known as Roaring Kitty, posted a screenshot of his portfolio with what appears to be a large position in GameStop. In the next hour, the CEO of Robinhood will join us to talk about how his trading platform has handled the volume and recent surge in meme stock trading, and we'll get into a lot of other things with him as well.
Okay. Can we talk about the Roaring Kitty of it all? What do you make of what's happening right now?
Look, I think for us, it's an opportunity to show how much we've grown since 2021, since the first of the meme stock frenzy incidents. And I think the really interesting thing is that these events have really been starting in the overnight sessions.
Right.
So Sunday night, where pretty much the only game in town is Robinhood if you want to trade stocks. I just announced yesterday that we passed over 20 billion in cumulative volume in 24-hour market, and that's been growing really, really quickly. So not only is there this new element where we can continue to kind of differentiate ourselves as the leaders in innovation and technology in trading, but we can also show just how the reliability of the platform has improved since we've gone public and in the past 4 years.
What do you make of those who say that what's happening with this Roaring Kitty situation is just another is an example or a mockery of some sorts of what the markets are supposed to be, that they're supposed to be sort of values driven in some, there's got to be some metrics that make some sense, and that we're into meme land all over again.
Yeah, I mean, I try to stay away from sort of like passing judgment on any particular style of investing and trading.
But I'm asking you to pass some judgment because there's got to be, you must have a view about this.
Yeah, I mean, personally, I consider myself sort of a long-term buy and hold investor. But Robinhood itself is a neutral technology platform.
Right.
We believe that any product that's available to institutional investors, and actually probably more, like a broader set of products. I think the accreditation rules need to be looked at, and those are overly restrictive too. But if an institutional investor has access to a product, retail should also have access to it and have the same abilities to trade as institutionals, as long as they're suitable and pass all the relevant checks.
A number of lawyers and others come on the broadcast in the past couple of days because there's been reports as it relates to Roaring Kitty that, for example, Morgan Stanley, which now owns E-Trade, one of your competitors, is thinking, should this guy be a client? Should we have him even on the platform? And is the SEC going to be looking at this? And is he communicating with people on private subreddits or on text messages or WhatsApp with other people? Do you think, and so the reason I'm mentioning this is there's some people who look at that and say he individually needs to be looked at in some special way, but other people say he's doing what everybody on Wall Street's been doing forever. How do you sit on that? Because thinking about Robinhood and what Robinhood's supposed to mean.
Yeah, I mean, I don't have any secret information more so than what you guys have and what you're seeing on social media. I do think that there's a lot of new tools that the regulators have to monitor trading activity. I mean, the consolidated audit trail, they can sort of see more information. A lot of these have been implemented in the past couple of years. So I would imagine that they're seeing something that hasn't been revealed yet, and they're investigating. But again, I don't really have any insights that are special there.
I don't even know how I feel. I don't even know how you should really, what constitutes insider trading at this point, and how do you distinguish Roaring Kitty from 3 hedge fund guys? I don't know how to do it. Do you?
No, I think maybe not even insider trading, but maybe
not insider trading, manipulation, whatever you want to call it.
If you are saying one thing and showing that, if that turns out not to be true, then I think the SEC would have a case for it. If it turns out it is true, then I don't see a difference.
Well, if it's true that you have sat forward in your chair because you're now looking at GME again.
Just the ownership stake that he put out, implying that he owned that much. And
but it's a good gig if you can have it, Vlad. You could be off in Nevis right now if you make 80 million.
Printing money.
Right, you already got it. But if you make 80 million overnight from just circulating a meme on Twitter,
I can't really speculate as to what's going on there.
E-Trade, the platform which is owned by Morgan Stanley, is reportedly looking at whether to kick meme king Keith Gill off the platform after his social media posts caused GameStop shares to rocket higher. Earlier, Vlad Tenev was on. He said he always says he almost calls it Hello Kitty instead of Roaring Kitty. I never thought of that, but John Fort is here to weigh in on that whole notion.
I'd love to see Hello Kitty's impact on the market. Yeah, this isn't a comfortable choice, Joe, but yes, E-Trade should kick Keith Gill off. This is a weird market. In a way like 2021, stocks have been on this crazy run and suddenly crypto's surging, risk is in, and retail investors are prone to chase a story maybe from Keith Gill that's too good to be true. First, let's recall how we got here. January 2021, depths of COVID, everybody stuck at home online, day trading takes off thanks to Robinhood, and from the protein soup emerges Keith Gill, known as Deep Effing Value on Reddit and Roaring Kitty on YouTube and Twitter. He's got an idea to stick it to the man and save GameStop using a cheat code to the stock market. If a bunch of rich guys are trying to hold a stock down by betting against it, and he can convince an army of little guys to bet the other way, well, it's like shaking a soda can. Pretty soon, GameStop shoots higher. Gill did it. It worked. He got rich. Hollywood made a movie about it called Dumb Money. And then a month ago, he runs the play again. In 2024, GameStop's not doing well as a company. No illusions anymore. This time, we just have a social media era reality star moving billions with the power of his memes. Even if Gill isn't breaking the letter of the rules, and regulators are reportedly looking at that, E-Trade isn't obligated to risk it with him, Joe.
And it's right. There's no other hand. Is there?
Well, Joe, always. On the other hand, E-Trade should not kick Keith Gill off the platform. They should send him a fruit basket. He probably hasn't done a darn thing wrong. I'm no securities lawyer, but from my reading of the rules, there are two major ways to get in trouble with regulators in a case like this. One, you say you like a stock or maybe a cryptocurrency without disclosing that you're being paid to pump it. That doesn't seem to be an issue here. Two, be misleading, like suggest people should buy something and drive up the price so you can turn around and quickly sell. This week, the Roaring Kitty account posted what appears to be evidence he didn't sell. All he did was resurface with some memes that in the masses interpreted to mean he was buying GameStop, and they should too. And then the stock went up. And then it turns out that, yes, he bought it. That just sounds like transparency to me. 8 years ago, Warren Buffett bought 10 million shares of Apple. Later, he told the public the shares went up. I don't think anybody called that market manipulation. GameStop traders pay attention to Keith Gill because his activity has a history of moving the stock. That's why kicking him off would risk a user revolt. And it would be a bad idea because being influential isn't against the rules. Joe.
Usually it was your second thing I thought you believed. Today I believe that you were more on the first side. It's just not, I know you can sort of in a blunt way make the Buffett comparison, but I mean, Buffett buys something, he's looking at cash flow, positive, there's nothing going on here other than trying to stick it to the shorts.
What about Ackman Icon? Wasn't Icon just sticking it to the shorts, right? And I mean, did anybody really think Herbalife was the next NVIDIA? I mean, come on, right? But it's the market at work. Why can't Keith Gill do it if Carl Icahn can do it?
I think as long as he's telling the truth about what he's showing, if you're not telling the truth, that's a different story. If those aren't actually your positions,
it'll be self-correcting.
It's buyer beware.
Because everyone would like to be Hello Kitty, Roaring Kitty, but not everyone can be Roaring Kitty, because it's
the beauty of it, he's not even using words.
But Joe, what about Becky pointed out earlier, zero-sum game? There's people on the other side of that 80 million that don't have the 80 million that he now has, right? And you right at the very beginning, GameStop's not doing any better than they were.
It's like that Michael Douglas speech to Charlie Sheen, right, in the room with the painting.
Right.
Just moving it around, right?
Yeah.
I mean, except it's the little guy who's winning this time, and not on the other hand.
It's the little guys that are losing to add up the 80 million.
Have I convinced you that maybe there's an argument on the other side versus the?
Yeah, I knew there was.
Okay.
Actually, but I agree with your
Well,
first.
if you really want to dig in, Joe, as always, you can get the On the Other Hand newsletter. We even got a QR code for you here on the screen. Or if you don't like to try to whip out your phone too fast, just type in cnbc.com/OTOH. You'll get the full text of both of these arguments, and you can see if you think that I actually believe the first one more.
Can't you just tell us? Oh, no. Okay, you want people to go there. All right, I got it. I understand how that works.
Yeah.
Okay, thank you.
Let's be clear. A guy purchasing a stock, then sharing his position transparently for everyone to see at the same time, posting some memes on social media, and not doing a pump and dump. That is not market manipulation, not in the slightest. Sure, regulators will look into Keith's private communications and see if he communicated privately with other people about his GME position before posting online. But if Keith did not engage in private communication about the topic before posting publicly, then he should be in the clear. As I've said before, someone posting their holdings online for all to see and posting memes on social media is not market manipulation. Not at all. About Robinhood. If you've been watching this channel for a while now, you know that I am not a fan of Robinhood. There are just too many problems with the platform, in my opinion. The events of January 2021, the infinite money glitch, Robinhood receiving the largest fine in FINRA history, company executives dumping massive amounts of shares when the company went public, and the list just keeps on going. Now back to GameStop and Keith. The thought that a brokerage would remove a client simply due to the position that client owns and their presence on social media is absolutely insane. E-Trade should not remove Keith, in my view, for multiple reasons. If E-Trade removes Keith, this would not only have implications on the securities market and the rights of individual investors, it would also have implications on Keith's First Amendment rights. Keith is free to say what he thinks, and if a stock moves simply because of his social media presence that's out of his control, he should not be silent about his opinions simply due to how others react to what he says or does. Additionally, if E-Trade were to remove Keith, it would deal a major blow to their business, as I would expect to see a mass exodus of individual investors leaving E-Trade to find better alternatives. After all, if they can do this to Keith, they can do it to you as well. And finally on E-Trade, if the number of calls Keith owns is the problem, then maybe that many calls should not have been sold in the first place. It's not Keith's fault if broker-dealers fail to properly manage their risk. At the end of the day, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers. And we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.